Well, hi folks, Andrew Bell here with you. Today I thought it'd be really timely with so much talk about interest rates to talk firsthand with Lauren Hall of Loan Market, who was named the 2019 Female Broker of the Year for Australia and 2020 the Young Professional of the Year. No one more qualified than you. Now, Loan Market is Australia's second largest home loan originator and provides about $80 billion worth of home loans here in Australia each year. They're an affiliate of the Ray White Group, and they're an invaluable tool for us as they do help our clients secure finance that they may not otherwise be able to get, but certainly to be able to get the best finance in the industry. So welcome, Lauren. Thanks for giving us some of your time today. There's been a real shift, hasn't there, in the approach of real estate buyers from, say, prior to Christmas to now, a totally different sort of attitude. Can you maybe summarise how that is?
Absolutely. So the first part is that pre-Christmas, there was a fear of missing out, whereas now we're seeing that move to more of a fear of paying too much and a lot of conversations around what is the market doing. The other part to that is also we were having a lot of conversations, or clients were driving the conversation around what is my maximum borrowing capacity. I just want to know the maximum I can borrow. And that's now shifted more to a space around what's my affordability and what are my repayments going to be. And a lot of that is driven by the recent increase in fixed interest rates.
Are they factoring in, are they feeling like, oh, interest rates could be up 1 or 2%, so can we work on what that would look like?
Absolutely. They want to allow some room so that there's some comfort if there are increases, that they know they can still keep the property.
That fundamentally means they're borrowing less than they would have before Christmas.
Correct.
I get that. What about the volume of buyers? Are you still seeing the same number of buyers that you were pre-Christmas to now?
Yeah, 100%. So inquiry is still really strong. Over 60% of Australians now use a broker to help them secure the best deal and get their finance. And for us as a business and a team, month on month, we still settle record volumes and help a record number of Australians purchase property.
Great stuff. I'm glad you can do it because I've seen the paperwork. Look, applying for a loan is different now, isn't it? I mean, we've had the Royal Commission and so on, and it's been quite a daunting process. Like, how difficult is it to go through that?
Yeah, you're correct. There have been two major changes. The first one was the Royal Commission, and the second one is around the COVID pandemic. So the changes we saw in the Royal Commission space were more around the responsible lending guidelines, and while more invasive for borrowers or for consumers, it was ultimately there to protect them at the end of the day. The changes we saw through the COVID pandemic were driven more from a risk appetite point of view from mortgage insurers and the banks. The good news from that is we're starting to see a lot of those restrictions that we had in place start to relax. So
I think it was pre the Royal Commission, it was about 3 or 4 pages for a home loan, and then it grew to what, 20?
20?
Yeah,
Correct.
20 pages. It's quite amazing.
A lot. Yes.
So how long is it taking to get finance approvals these days? I ask that because we get people coming to us going, I'd like to make an offer please on a place, subject to finance. And straight away our sellers go, how long's that?
Correct. And there's a couple of factors that will come into play in that space. The first one is the complexity of the client's position and the banks that they'll qualify for, that they have access to.
Self-employed and those sorts of things.
Absolutely. The other part of that is also around the time frame for that lender. Clients who are organised and who have all their documentation ready will achieve an approval faster because they're more organised. And I would definitely encourage, if you're wanting to go out to market and make offers, you need to be getting your paperwork organised a few weeks prior and getting that across to your broker so they can get you fully pre-approved before you go to market.
Yeah, to me, when we have somebody approach us and say they'd like to buy subject finance and we find out they hadn't even put a loan application in, we know that it's just really totally impractical. Let's move on a bit and have a discussion about interest rates. Now, I know at law you're not allowed to give financial advice, so I'm not asking you to do so, but you would be hearing what banks are suggesting and perhaps others in the marketplace. So are we talking about potentially 1%, 2%? Is it something in that range that we could expect?
So in the fixed rate space particularly, late 2021 you could secure a 4-year fixed rate at 1.99%.
Yeah, wow.
Crazy cheap money, record lows as we know. The reality is today that same 4-year fixed rate is going to be sitting in kind of the 4% range.
So up 2%.
Yeah, absolutely, in quite a short space of time. Now, context around that is that these rates now were the rates we had pre-COVID, and that was cheap money. It wasn't expensive.
Yes. Now, whoever dreamt we'd have 1.99.
Absolutely. We've just had this mentality or this mindset that we can get rates with 1s and 2s in front of them for fixed space. So it's just readjusting that and understanding we're moving back to where we were pre-COVID.
What about the variable rates?
Variables, so there hasn't been an increase in the variables as yet. There is a very keen awareness and interest in what the RBA cash rate announcement will be, and then we may see some movement from there. And economists are predicting potentially a change in those variable rates once the RBA cash rate moves.
It was quite a challenging prospect for a buyer to go, do I go fixed or variable? Because the variable's attractive, but it can vary and go up, whereas you're locking with the fixed. During the period of time when interest rates were actually dropping, people were locking in the fixed rates. Would that still be the way they're going now? Are you now seeing the reverse and people are going, no, I'll stick with a variable because it's lower? And that's a risk, I guess.
Yeah, absolutely, and that's a really, really good question. Fixed is built around stability, knowing exactly what your repayments are for a certain period of time. And the variable is all around flexibility. There's no right or wrong way to go here. At the end of the day, it's really important to understand what's most important to you. If interest rates were to increase and you would feel financial stress, then it would be appropriate to consider a fixed rate.
Yeah.
If you need flexibility to pay more debt off, to have offsets and redraw facilities, then a variable would be more appropriate in that instance.
So I guess the people that would be concerned about interest rates increasing are those who currently have a variable rate.
Yes.
Because if you're on a fixed rate,
you're already locked in.
You're locked in.
Probably at 1.99.
Yeah. And it would only be, how long are those loans normally? 2 years, 3 years?
So you can fix for anywhere between 1 and 5 years, and the rate will be different in that space. So very popular 2-3 year fixed rate, but again, obviously when the rates were really low, then we did see a lot of people look to fix longer to get access to cheap money for a longer period of time.
So in my mind, I'm thinking if you're worried about interest rates going up, get in now and lock in, and you can be comfortable.
Correct.
I know where I'm at for the next 5 years. Way to go. Because you're not in position to be able to offer that advice and determine what the Reserve Bank may well do, but we feel it's probably going to be a couple of fairly quick, I think it's going to be a couple of quick kicks, and then perhaps a pause to see how inflation is brought under control, and then maybe some more interest rate rises after that.
Yeah.
Is that how you would see or imagine it playing out?
There's definitely a keen interest in watching what's happening with this RBA cash announcement. The reality is we knew that interest rates weren't going to stay this low forever. We were aware of that. So it will happen in time. How quickly that happens and how those moves play out, we'll wait and see what happens there.
Cool. Oh, of course, one of the key areas of financing and home borrowing is valuations. And I know valuers, they're meant to look after both the consumer and the bank. And so how's their attitude at the moment? Are they relying on past sales only to go, oh, well, it's sold, we had comparable sales sell for that 3 months ago, we can use those valuations? Or are they projecting forward now and going, well, we see prices might be softening, and so we're going to work on those figures?
Yeah, correct. And you're absolutely right. The valuers are there to protect the bank and also the consumer. They'll be looking at any future factors that could impact the saleability of that property or the price that that property may sell for. When preparing their valuations, they'll provide some commentary, and they also use a risk rating scale. So what we're seeing is that commentary is starting to be more cautious in its tone, and as some of those risk ratings are starting to increase. Obviously, as there is a little bit more instability in the economy at the moment.
I think a lot of sellers fail to recognise this as an issue, because you may well be able to find a buyer who wants to pay the price you want, but they can't borrow the money. The valuations won't support the borrowing to be able to pay that price. And so values play such a big role in determining the actual sale price that you're going to get.
Correct.
And we see it now, they're getting much more conservative. So right now, of course, people are out and about. We still see the same volume of inquiry, but we're getting more people saying subject to finance, and it's just knocking them out of the game. How difficult is it to get pre-approval so that they're at least maybe 80% of the way there? They've still got to get the valuation done, but at least they're pre-approved to a certain amount. Is that difficult?
Look, not all banks will offer a fully assessed pre-approval, so the first piece is understanding what banks you qualify for and can we get access to that. Again, the more organised you are, the more documentation you have ready to go, the quicker you will achieve that. But absolutely getting a fully assessed pre-approval is critical before making offers. And I would suggest doing that. As you said, it's 80-90% of the work is then done, and really we were just working with the valuation.
If you don't have a pre-approval, you're pretty much knocking yourself out of the game.
Make sure you can get the money first before you go and buy the property.
Right. And perhaps my last question today, is there still competition amongst the banks? We know that going to your own bank, you're probably going to the worst lender of the lot because they think they've got you. Is there competition? Can you still go and shop around? Can you go around and shop around?
100%, and the banks are still very keen to do business. Having access to over 60 lenders means it's really easy for us to see really quickly if the offer that you've been given is in market. A lot of the banks don't put their best foot forward, so they expect you to negotiate, okay? They also have a target client that they're looking for. So for us, we know this. We know what banks are more open to negotiating for what particular client. And so that's where we're here to obviously push them as far as we know that they will go.
And you're an expert at that. Well, Lauren, I'm going to put your details on screen so people know how to get in contact with you, as I'm sure many of those viewing this will go, hey, I better do something about it. You're the best person I know, so I know you'll look after our clients.
Thank you.
They mean so much to us, and I'm sure you'll make sure that they get the best package possible.
Thank you.
Now, I'm a great believer in cycles, and I've been preempting since late last year that the property market would be transitioning into the next phase of the market, and that was just going to be a natural occurrence. In fact, a very healthy one. Likewise with interest rates, we all knew that the emergency stimulation settings that were put in place at the beginning of COVID were only ever going to be short term. They're always been designed to stimulate our markets, and they've done a marvellous job. But we can see the dangers of overstimulation, that is the rise of inflation, and that needs to be brought under control. This is not peculiar just to Australia, it's happening all over the world. And once we've gone through that period of resetting interest rates to more realistic levels, it will be stabilised, and the real estate market will go through its transition at the same time, from the boom market that we had into a new period. So don't be alarmed, it's just a normal process in market cycles. And when you're aware of these stages, you're able to be far more relaxed about what's happening and to be able to manage those cycles to best suit your own personal circumstances. I'm always here to help with any insights that you may be seeking. Look forward to being with you again in a fortnight's time. Until then, warm regards,